Welcome back everyone, and for those new to the channel, I focus on dividend-based investing where I provide a weekly update on my portfolio, and today we're going to be focusing on recently IPO'd companies. Now it really helps if you give the video a thumbs up, and with that said, let's get straight into the video. And so the first company that has recently IPO'd is that of Snowflake, that is ticker symbol SNOW. Now they are headquartered in San Mateo, based in California, and specifically they are a cloud-based data warehouse company where they offer data storage and analytics as a service. And so this company is classified as a data warehouse as a service. And so let's take a look at how the company is performing. So if I just search in for ticker symbol SNOW, we have the company Snowflake on the screen. The company has only traded recently, and that's why we don't have much information on the graph. We can see that to own one stock, it's currently $241. Now if we scroll down, we can see some of the other metrics. So here we have an income statement. We can see how much revenue they're making versus the net income. Right now, the values are negative, so minus $348 million. As with most companies, these are early days and you almost expect to see a loss. But here on the balance sheet, we can see we have a debt to asset ratio of 61%. So what that means is that the company is borrowing a lump sum of money, in this case 61%, and they are using that to help run the company. So we can see the total liabilities, which is 621 million, versus the number of assets, which is at 1 billion. And that is what is driving this debt to asset ratio. And so next up we have Palantir, that is ticker symbol PLTR. Now they used to be headquartered in Palo Alto, but they've since relocated to Denver. And their software is provided to large companies and also government agencies, and is generally regarded as a secretive data company. Now this is another recent IPO that took place. And so to date, the company has built two software platforms, and those are Gotham and Foundry. And so Gotham is a platform that enables users to identify different patterns hidden within the information. To date, this has helped the likes of the United States and also the military. There's not much more information that is provided other than that it's top secretive. On the other hand, we have Foundry, which creates a central operating system and it's for organizing data. And then individual users can integrate and analyze the data. And so taking a look at the stock at the moment, it's currently just under $10. In the last week, the stock has dropped and it's risen. Now, if we look at the company performance, just scrolling down, we can actually see that we have a net income of negative $579 million. The revenue is currently at $742 million, and that is giving us a profit margin of negative 78%. Having a look at the balance sheet, we have a total assets of 1.59 billion and a total liabilities at 1.45 billion. So very high, giving us a debt to asset ratio of slightly under 91%. Now this company has been operating for a while. It's only recently IPO'd and we're starting to see all the figures. All in all, this company has a way to go before they start reaching profitability. I guess we are starting to see a trend here. And so the final company that I want to look at is that of Asana. And so Asana is a software as a service, which sells software as a subscription. And so the product that they build focuses on improving team collaboration and improving work management. And so teams can be created and work can be assigned to teammates with deadlines all defined, and it increases the chance of the product's success. Currently, the stock price is at $24. On the Trading 212 platform, we don't have any indicators on how the company is performing. Of course, we can look at the likes of Yahoo Finance, but if you are interested, you can always analyze yourself. What I would say is that for all the three companies that I've looked at, they are all recently IPO companies. I've done videos in the past explaining how I feel about IPO-based companies and whether you should invest in those or not. But as a quick summary, generally, it's never a great idea to invest initially. What I would say is that it doesn't mean you can't invest into such companies if you truly believe that they will be here in the long term. But generally speaking, you are looking to pay higher prices when a company first IPOs, and that's just because all the private holders have the opportunity to sell out of the company that they've been invested in way before the IPO process. And then taking that idea further, when you invest in any given company, you should always invest in ones that you believe are going to last in the long term. But I felt it would be fun to look at some of the recent companies that have been talked about quite a bit in the tech industry. So hopefully that was enjoyable for you. And so the question I have for you this week is, will you be investing in any of these recently IPO companies either now or in the future? Let me know in the comment section below. Now going forwards, each week I'm going to be focusing on a piece of technology or something that just interests me. And so this week I've decided to talk about Trello. Now Trello is not an IPO based company. We have a product that will help with team collaboration. Now for me personally, I have a Trello board. It's completely free and it helps me to plan out the content that I'm going to talk about each week for the YouTube channel. Most commonly, this platform is used in the tech industry and it's used for team management. So I wanted to give that a shout out this week. It's not sponsored, but if Trello wants to provide me with some money, that'd be great to pay the bills. So thanks everyone for the questions that you've submitted. You can send them at jjamesinvestor@gmail.com. So the question that I received was, I have an average salary at a school in the UK and I'm concerned that I will have to continue working past retirement. I'm currently 30 years of age with an art degree, but I have struggled to get a pay rise since I first started working 6 years ago. Since COVID, I have been concerned about the stability of the profession I work in, but I don't have the confidence to switch career paths. Do you have any advice on the next steps I should take? Now, whenever I receive a question that generally has a negative tone, I like to think about the positives. And so from the onset, I can see we have an individual that has an average salary. So I'm going to assume around £25,000 mark. And keep in mind that having an average salary is nothing to be ashamed of. It's an average for a reason. You're going to have a bunch of people that of course earn more than that, but you have many that will earn way less. So having an average salary puts you in a good position. And I would see that as a positive. Now the main concern that we have here is that the individual may have to work past retirement. And the main reason is that they haven't received a pay rise since they first worked 6 years ago. So that is a negative. Every year we have to think about inflation. So in an ideal situation, our salaries will be aligning and increasing with that of inflation year on year. Now for a lot of people, this simply isn't the case. Or if they do receive a pay rise, it's just matching that of inflation. Now personally, I see that you have two options here. The first one is that you should look at another job. Again, teaching at a school, you have all the skills necessary. You can apply to a different school and there you can demand a higher salary. Now, once you have a deal in place, then you have the leverage to negotiate with your current employer. And from there, you can demand a pay rise. Generally speaking, it's more cost effective to switch jobs than to rely on the employer to give you a pay rise. But you always need leverage on your side. Potentially, you could ask for a pay rise, just hope for the best, but when you have no leverage, it's really difficult to do so. Now, the other concern outlined here is due to COVID. Now, I'm not sure of the specific situation here, but combining lockdown with the fact that there's layoffs in all different industries, I understand completely the concern that you have in terms of future stability. Given that you are a school teacher, the demand for teachers is not really going to fade away. And so in the long term, I wouldn't necessarily have a concern with how the situation has been this year. Now, in terms of switching career paths, I don't think it's required unless you're unhappy within your current job. In the past, and even to this day, there's always this thought process that if you switch to that of the tech industry, then you're going to have a massive salary. Generally speaking, this is not really the case. There's average salaries in all different industries, and when you take a cross-section of all the different sectors, then you have a standard salary across all of those. And so that's the advice I would give personally. With any form of negotiation, you have to maximize the chances on your side, and it's really a game of leveraging. Of course, it's tiring to go to job interviews, but even if it's just to maximize your chances of receiving a pay rise, then you can always use that against the employer. And if they really want you at the company, then they will match the terms that you request. But all in all, this individual should be happy that they have a job. There's a lot of people that don't even have this quote unquote average salary. And so definitely try to focus on the positives. And so on to some news now. And this article here caught my eye, where universities are using surveillance software to spy on students. And so for those that are currently studying at university, most, if not all of the lessons are in the form of remote learning. And so we have a case where universities are using surveillance software to keep tabs on students, checking whether or not they are engaging with their studies. Now, this is no different from companies out there that have suddenly switched to remote working, and they like to keep tracks and install software to check how productive you are. And so from a work aspect, I really can't stand that way of thinking. But let's look into this article more to see what is happening within the education system. So here we have students that are being monitored with tracking software, and this is keeping tabs on which types of lectures they are attending, what reading material they download, and what books they take out of the library. And this is high numbers here. We have at least 27 universities across the UK that are using these types of software. And so out of the 24 institutions which consist of the Russell Group, there was only one that answered whether or not they're using such technology. Of course, with any type of surveillance, we have the concern whether the monitoring is taking place outside of study hours. Most likely there's a lot of data collection and it's capturing a lot of information that it really shouldn't be. So here we have one type of system, and it tracks how students log into their virtual learning environments, any type of click events, and any work that has been handed in. So there's a lot of information that is being tracked here. And so if we have students that aren't really engaging in the education, then they may actually be contacted by a student support advisor. And then there's also an automated process that will send out emails every 2 weeks, deciding whether or not the individual has had low engagement with the university. And so if we look at the private educational institution, the University of Buckingham, they've been quoted to state, AI and intelligent platforms will monitor student engagement and understanding, helping staff to see where students are falling behind or need more material to aid their learning. And they believe that the system will flag up at-risk students and alert university staff to those who may need extra attention. Now, personally, I just don't really see the point in any of this. When you look at how university teaching takes place, you would just be in the classroom, and the grades that you receive at the end of the year will dictate whether you go to the following year or you have to repeat. Most of the time, students know if they are falling behind or not. It's at university level after all, and so I really don't think this type of technology needs to exist. For me personally, it's unfortunate to see this take place within the academic space. It's very strange that when you have remote companies or remote classrooms, then there's this need to track individuals. Hopefully companies will remove this type of tracking technology. Now, it's not to say that there could be some interest in metadata to actually help individuals, but most of the time, if there is a midterm test, then that will decide whether you are behind or not. So thanks for watching, everyone. If you're new around here, then do consider subscribing. And with that said, I'll catch you in the next one.